Islamic finance is a system of finance that operates according to Islamic principles. It is based on the belief that money itself is not an asset, but a medium of exchange. Profit is permissible, but it must be earned ethically, and without violating Islamic law, or Sharia. Islamic finance aims to promote social justice and economic well-being. Islamic finance emphasizes ethical investing and risk-sharing. It prohibits activities considered harmful or exploitative, such as excessive interest known as Riba. Islamic finance caters to individuals and businesses seeking ethical financial solutions aligned with their faith. Islamic finance is guided by a set of core principles derived from Islamic teachings. One of the most fundamental principles is the prohibition of interest, or riba. Charging or paying interest is strictly forbidden in Islam. Instead, Islamic finance emphasizes profit and loss sharing, or PLS, as a more equitable way of conducting financial transactions. Another key principle is risk sharing. In Islamic finance, both parties involved in a transaction share the risks and rewards. This principle encourages transparency and fairness. Ethical investment is paramount in Islamic finance. Funds must be invested in halal or permissible activities that benefit society and are not harmful. Islamic finance and conventional finance differ fundamentally in their approach to interest. Conventional finance relies heavily on interest-based lending and borrowing. Islamic finance, on the other hand, prohibits interest in all its forms. Instead, it offers alternative models such as murabaha, which is cost-plus financing, and ijara, which is leasing. Another key difference lies in risk management. Conventional finance often places the burden of risk primarily on the borrower. Islamic finance promotes risk-sharing between parties, encouraging greater prudence and responsibility. Ethical considerations are also paramount in Islamic finance, which prohibits investments in industries deemed harmful, such as gambling, alcohol, and tobacco. Islamic finance offers a diverse range of products and services designed to meet the needs of individuals and businesses. These products are structured to comply with Sharia principles, ensuring that all financial transactions are ethical and just. The goal is to promote fairness and transparency in all dealings, avoiding elements like interest, riba, excessive uncertainty, gharar, and gambling, maisir. This ethical approach attracts not only Muslims but also non-Muslims who are looking for ethical investment opportunities. Sukuk, often referred to as Islamic bonds, are asset-backed securities that comply with Islamic principles. Unlike conventional bonds, sukuk represent ownership in a tangible asset, usufruct of an asset, or an investment in a project. This structure ensures that the returns are generated from real economic activities, making them more stable and less speculative. Investors in sukuk receive periodic profit payments derived from the performance of the underlying assets, rather than interest payments. They provide investors with ownership stakes in underlying assets, generating returns linked to the performance of those assets. This direct link to real assets helps to mitigate risk and provides a more secure investment. Additionally, the transparency in the structure of sukuk ensures that investors are fully aware of what they are investing in, fostering trust and confidence in the financial system. Takaful is an Islamic alternative to conventional insurance. It is based on the principles of mutual assistance and shared responsibility. Participants contribute to a common pool, which is used to support those who suffer a loss. This system not only provides financial protection, but also fosters a sense of community and solidarity among participants. It operates on the principle of mutual cooperation and risk-sharing among participants. Each member of the Takaful scheme agrees to guarantee each other and contribute to the pool of funds. This collective approach ensures that the risk is distributed among all participants, reducing the burden on any single individual. Contributions from participants are pooled together to support those who experience a covered loss. This pooling of resources ensures that there is always sufficient funds available to cover claims, providing peace of mind to all participants. The surplus, if any, is either distributed back to the participants or used for charitable purposes, further enhancing the ethical nature of Takaful. Islamic home financing allows individuals to purchase homes without engaging in interest-based mortgages. This is achieved through various Shariah-compliant contracts that avoid the use of interest. Instead, the focus is on profit sharing and leasing arrangements that are fair and transparent. Instead, Islamic banks use models like murabaha or ijara to facilitate homeownership. In a murabaha contract, the bank buys the property and sells it to the client at a profit, with the payment being made in installments. In an ijara contract, the bank buys the property and leases it to the client, who eventually buys it at the end of the lease term. These models ensure that the transaction is transparent and fair, providing an ethical alternative to conventional mortgages. Section 5. Ethical considerations in Islamic finance. Ethical considerations are deeply embedded in the principles of Islamic finance. It goes beyond simply adhering to rules and regulations. It emphasizes fairness, transparency, and social responsibility. Islamic finance promotes financial inclusion by providing ethical financial solutions to individuals and communities often excluded from traditional banking systems. It encourages investments in ethical and sustainable businesses that benefit society as a whole. Islamic finance institutions often incorporate social impact considerations into their investment decisions. They prioritize investments that generate positive social and environmental outcomes. Section 6. A historical journey of Islamic finance. The roots of Islamic finance can be traced back to the early days of Islam. From the bustling marketplaces of ancient cities to the scholarly discussions in mosques, the principles of Islamic finance were deeply embedded in the daily lives of early Muslims. These principles were not just theoretical, but were actively practiced and enforced in trade and commerce. The Quran and the teachings of Prophet Muhammad, peace be upon him, laid the foundation for an ethical and just financial system. These teachings emphasized fairness, transparency, and the prohibition of exploitative practices such as usury, known as Riba. The concept of risk-sharing and the importance of mutual consent in financial transactions were also highlighted. Early forms of Islamic finance emerged in the 7th century, with merchants engaging in trade and commerce based on Islamic principles. These early traders adhered to the guidelines set forth in the Quran and Hadith, ensuring that their business dealings were ethical and just. They developed various financial instruments such as mudaraba, profit sharing, and murabaha, cost plus financing, which are still in use today. Over the centuries, Islamic finance evolved gradually, with scholars and jurists developing comprehensive frameworks for Islamic financial transactions. These scholars meticulously analyzed religious texts to derive principles that could be applied to contemporary financial issues. Their work resulted in a rich body of literature that continues to guide Islamic finance today. The modern revival of Islamic finance began in the mid-20th century. This resurgence was driven by a growing desire among Muslims to align their financial practices with their faith. Pioneering institutions were established, offering products and services that complied with Sharia law. These institutions laid the groundwork for the global Islamic finance industry we see today. It gained momentum as Muslim-majority countries sought to establish financial systems aligned with their values. Governments and financial institutions in these countries began to recognize the potential of Islamic finance to promote economic development and social justice. Conferences and seminars were held to educate and promote the principles of Islamic finance, leading to its widespread adoption and growth. Section 7. Practical tips for beginners in Islamic finance. For individuals new to Islamic finance, several practical tips can help navigate this growing field. Start by conducting thorough research and understanding the basic principles of Islamic finance. Consider seeking guidance from a qualified Islamic finance scholar or advisor. Look for reputable Islamic financial institutions that are Shariah-compliant. Compare different Islamic financial products and services to find those that best suit your needs and risk appetite. Remember to read the terms and conditions carefully before entering into any financial agreement. Section 8. The future of Islamic finance. Islamic finance is experiencing steady growth and expansion globally. It is evolving to meet the demands of a rapidly changing world. Innovation is a key driver of this growth, with new Islamic financial technologies or fintech emerging to enhance financial inclusion and accessibility. Islamic finance is also playing an increasingly important role in promoting sustainable development. Its emphasis on ethical investing and social responsibility aligns well with the United Nations Sustainable Development Goals, or SDGs. The future of Islamic finance is promising. It is well positioned to contribute to a more equitable and sustainable global financial system. Section 9. Conclusion: the enduring relevance of Islamic finance. Islamic finance offers a viable and ethical alternative to conventional finance. Rooted in principles that emphasize justice, fairness, and social responsibility, it provides a framework that resonates deeply with people of all faiths and backgrounds. Unlike conventional finance, which often prioritizes profit maximization, Islamic finance seeks to balance financial gain with ethical considerations, ensuring that investments contribute positively to society. Its principles of justice, fairness, and social responsibility resonate deeply with people of all faiths. This inclusive approach fosters a sense of community and mutual respect, bridging cultural and religious divides. By focusing on shared values, Islamic finance promotes a more harmonious and cooperative global financial environment. It encourages investments that are not only profitable, but also socially responsible, supporting projects that benefit communities and protect the environment. As the world seeks more equitable and sustainable financial solutions, Islamic finance is poised to play an even greater role in shaping the future of finance. Its emphasis on sustainability aligns perfectly with the growing global demand for green and ethical investments. By prioritizing projects that promote environmental stewardship and social welfare, Islamic finance can help drive the transition to a more sustainable and inclusive global economy. Its focus on ethical investing, risk-sharing, and financial inclusion provides a compelling model for a more just and equitable financial system that benefits all. By sharing risks and rewards more equitably, Islamic finance reduces the likelihood of financial crises and promotes stability. It also prioritizes financial inclusion, ensuring that underserved communities have access to financial services and opportunities for economic growth. The principles of Islamic finance are timeless and universal, offering valuable insights for building a more ethical and sustainable financial future. These principles can be applied to various financial systems around the world, providing a blueprint for creating a more just and equitable global economy. By embracing the core values of Islamic finance, we can work towards a future where financial systems serve the needs of all people, fostering prosperity, stability, and sustainability for generations to come.